Hi, welcome again to another edition of Market Analysis for today, February 21st, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, so the venerated Dow Jones Industrial has fallen well behind other benchmark indexes. Now, if replacing retail pharmacy chain Walgreens with technology giant Amazon is the plan to change that, it could be coming in at a bad time. And we'll be seeing that change by Monday. Now, to be sure, the change makes a lot of sense. Walgreens has plenty of problems and has long stopped being a reliable indicator of the overall health of the stock market, which the Dow Jones Industrial Average is designed to be. Its shares are down almost 40% over the past year, but that's not the biggest reason why the Dow has underperformed. The Dow is up 14% in the past 12 months, compared with 22% for the S&P 500 and 42% for the Nasdaq. The reason for that is the meteoric rise of the technology stocks, specifically the Magnificent Seven, that have contributed the bulk of index gains since the start of 2023. As of now, only Apple and Microsoft from that group are in the Dow. Amazon, with a 74% 12-month gain, is a welcome addition. Now, Amazon, like Walgreens, can be considered a consumer retail stock, unlike peers such as Meta or Alphabet, but it also generates a lot of its growth from its cloud computer services unit. Its recent gains are on the back of the tech services buzz, not selling goods. Still, it isn't like the Dow is cheating. Tech stocks are arguably underrepresented in the index anyway. So Amazon seems like a reasonable hybrid and similar to when the Dow started in 1896. That's right, 1896, with companies dealing in tobacco, cotton, and railroads. Technology stocks are the pillars of the U.S. stock market. They have deserved a heavy weighting. The problem is that the Federal Reserve looks like set to keep rates higher for longer, and we're going to be having those minutes today, also with Nvidia earnings after the bell. So people will be asking if the Magnificent Seven stellar run is about to run out of fuel, and that's exactly what seems to be, as we are just having the second day in a row with the implied open to the downside. So I'm using my support 17,276. So we're going to continue most likely with a sell-off of the indices. I mean, we had a nice run to the upside. So a quick, nice pullback correction is welcome. So let's see. On the S&P 500 as well, I'm looking at 49.36 or even 49.60 initially. The Dow, I'm looking at 38,500 initially, but I have my support at 38,382. And then we have crude oil. That crude oil, I was actually said that it was going to take a nice, jump to the upside and, hit at least 79 or 80, but it has been retreating. It's doing a strong pullback. We are trading right now below the moving average, which acts as dynamic resistance. So let's see if 76, 75 and a half is going to be the target for today. Which has been recovering is Nat Gas. Yesterday, that was a boogie on me. Nat Gas just spiked. So therefore, we continue to see right now it's balancing itself out. It has come out of the oversold territory in the RSI. So this could be one of those moments that, okay, we out of the RSI and we're gonna come back down again and trend lower, or we can just say, okay, no, let's make another attempt at $2. Those are your options. Gold, however, is showing us a nice, textbook scenario where we are creating consecutive higher lows and consecutive higher highs. So we are in an uptrend. So we are gonna continue with the trend. The trend is your friend. So let's continue doing that. 2040 initially, it could be our target. Okay, a pullback correction could be set right around half of the body. So let's see if that will happen, or will you just take a nice pop and go to 2040 or even 2050 where I have my resistance. Silver, however, is showing more of a consolidation stage. Yes, ranging. Is within yesterday's trading range. So I'm thinking that silver is gonna probably just idle around 23, the pivoting around 23. Copper also looking to, is not in a consecutive with this one obviously from Monday it didn't start on the green day, but today is looking strong. So we're gonna go with the momentum, with the trend up 390, 392, that target buy. Bitcoin, yesterday we talked about Bitcoin having a ranging scenario, consolidation, and that was a setup for a breakout. Well, that breakout seems, it tried to break out to the downside, but it found some support around here and is rebounding. So will that be enough? Or will we see another attempt to the downside and break 50,000? That 50,000 is a psychological support level. In the currencies, they're looking to stay north, at least the euro looking to stay north of 108 or around 108. So far, so good. And the pound looking to stay around 126. So far, so good. And that could happen if the dollar index just don't make any pops to the upside. If it goes to the upside, if it goes back up to 104.20, we'll see a pullback on the currencies and definitely a pullback on the metals. But if the dollar index happens to just fluctuate again to the downside like it did so yesterday towards the 103.5 handle, then we'll definitely see a nice pop on the currencies and the metals. That's it for me today. Have a great trading day, and I'll see you tomorrow.